Come on in, sit back and relax. You're listening to episode 225 of the WealthTech Today podcast. I'm your host, Craig Iskowitz, founder of Ezra Group Consulting. And this podcast features interviews, news, and analysis on the trends and best practices all around wealth management technology. And this episode is part of our Breakaway Advisors series, and we are covering Envestnet Tamarac. Now, Envestnet Tamarac is one of the most popular tools for advisors in the industry. They have a wide range of features and functionality, basically end-to-end for any RIA or advisor, from CRM through to portfolio management, portfolio reporting, performance reporting, trading rebalancing, client portal, basically everything you'll need to run your RIA. Now, according to a couple surveys, they are ranked either 1, 2, or 3, and depending on which survey you look at. In the Keats's 2023 tech survey, Envestnet Tamarac in portfolio management has a 12% market share. Now, for just performance reporting, Keats's has them at 34% of RIAs with 10 plus advisors using Tamarac. And for the Tamarac CRM of RIAs with 10 plus advisors, they hold 10% market share, which is quite impressive. Now, on the another survey from T3, their Inside Information Software Survey, which just came out at the T3 conference last month, compiled by Joel Bruckenstein and Bob Vires. Tamarac CRM has a 6% overall market share, but almost 12% of RIAs with 8 million in revenue and above. So they break things out a little differently. The Keats's survey bases on number of advisors. T3 survey breaks it up based on revenue. In terms of portfolio management, T3 has Tamarac at 12% of the overall market, but 22% of RIAs with 8 million plus in revenue. And finally, trading rebalancing, they are ranked number 1 in the T3 survey with almost 11% market share. So bringing Tamarac in is a great idea. And to talk about the product, technology, the platform, we have a number of people. First is Philip Rogerson, who is head of the RIA channel, and he brought a few members of his team, which they will introduce themselves when we get the episode started. Now, Phil has been at Envestnet for almost 5 years, and before that, he spent his entire career at Russell Investments, eventually moving his way up to running their entire U.S. advisor-oriented business. So he's got a lot of good experience in the industry. We had really great conversation. We spoke about, again, the breadth and depth of Tamarac's market share, talked about their rebalancing, how they rebuilt some of those workflows, improved. We're big on rebalancing here at Ezra Group. We do a lot of competitive analysis when it comes to portfolio management, so we dive deep into rebalancing, so I'd love to talk about that. We also talk about integrations and how they've expanded the integrations to Tamarac, which are already pretty decent, and also their internal integrations, not only external, but internal integrations with the Envestnet core platform around UMA, which we're pushing pretty hard for that for a number of our clients. So we'll get into all that in just a few minutes. Let's talk about tech stacks. Now, at Ezra Group, we've seen tech stacks of hundreds of RIAs. And let me tell you, most of them are loaded down with tech debt. So you shouldn't feel too bad about yours. But let's face it, tech debt is like a giant anchor holding back your business growth. If you want to free your firm for exponential growth, you should run, not walk, to our website, ezragroup.com, and fill out the Contact Us form. Our experienced team can evaluate your current tech ecosystem, deliver targeted recommendations, optimize your existing systems and operations, or run an RFP and help you implement new software to take your firm to the next level. You can take advantage of our free consultation offer by going to ezragroup.com. Housekeeping items that we always do before the interview. Please subscribe to the show wherever you listen to podcasts so you don't miss an episode. Check out investinothers.org. That's the Invest in Others Charitable Foundation. They do a lot of good work in our industry, raising money to donate to charities that are either run by or helped by financial advisors. I'm happy to intro our two guests for this podcast. We have Philip Rogerson, head of RIA channel for Envestnet, and Brian Daley, sales engineer, RIA channel for Envestnet. Hey guys, welcome.
Hello.
Hey, good morning.
All right, so Phil, you say hello first.
Hello, it's really good to be on the podcast. Thanks very much, Craig.
That's Phil's voice. And for those listening, here's Brian.
Hey, this is Brian Daley. Thank you.
All right. So I should introduce one at a time, but I do multiple people so we know who's who. Awesome, guys. Really happy to have you here. This podcast is part of our new series on Breakaway Advisor Tech, where we are bringing on vendors such as Envestnet and Tamarac to talk about your technology and how it can help breakaway advisors build out their businesses, enhance their sales, their growth, and of course, this is all about the technology around here. So enhance and improve their tech stacks. So let us dive in. Phil, you want to start off maybe talking about some of the trends in the breakaway space and how Envestnet sees it?
Yeah, absolutely, Craig. Thanks. I think this is one of the most exciting times in my, multi-decade career to be working in the independent channel. If there's been a contest for, the winning business model, I think the jury's in, and the RIA channel has really kind of won. I think everyone's well aware of, just the fact that the channel is growing faster than any other channel, more than doubled in assets in the last 10 years, more than doubled in headcount. But by a number of survey estimates, most notably Cerulli recently did a survey of IBD and wirehouse advisors. 35% of those advisors said that they had considered going independent within the last 12 months. So the idea of preparing a path for advisors to make that move from large financial services entities to the independent model, whether that's as a part of an existing practice that they're going to take an ownership stake in, that they're going to be an employee in, or whether they're going to start their own brand new firm. Creating a methodology for them to do that in an efficient way and set up a new business is increasingly important in the industry. I think the other.
It's incredibly important.
Hugely important. I think the other point I would make with that is, most of the time people think of technology as a sort of an afterthought to how they to what they're going to do once they've made the decision to go independent. But I'd also offer the view that technology, in many ways, is a catalyst for this. Our firm, Envestnet, was founded on the principle that we could enable smaller independent advisory firms to compete with the largest, most well-capitalized financial services entities in the world. I think that premise is more important today than it was even 20 years ago. When today, I guess I would just say that technology's come far enough along that more and more advisors are seeing technology as an enabler that will allow them to do that, and that's playing in some part a role in encouraging advisors to make that move.
Do you see more breakaways that are launching on Tamarac, launching their own firms or joining existing firms?
We see a little bit of both, and I'll give you some very specific statistics here. According to data over the course of the last 2 years from Cerulli, about 43% of breakaway advisors have joined an existing practice. We've seen pretty significant activity through aggregators. 57% have gone on to start their own firms. So the numbers are not skewed dramatically, but there is a slightly larger percent that have gone independent. And I would say that our experience has roughly reflected that.
Excellent. Yeah, I mean, here at Ezra Group, we work with a lot of RIAs, and we're also seeing both. That we're seeing existing clients are bringing in breakaways and enticing them with packages and technology and other ways to grow their business, as well as firms launching and starting their own. But talking specific technology, the core of the Envestnet's RIA capabilities are still around the Tamarac platform, which has the largest market share, if I'm not mistaken, for over 40% of billion and up RIAs use Tamarac.
That's correct.
Right. So if I quoted that properly, can we talk about some of the technology and capabilities you've been adding recently that you feel would be interesting to breakaway advisors?
For sure, and I'm going to transition this pretty quickly over to Brian. But as a kind of a headline into that question, just to add a little detail to some of the content you put out there, we have about 1,500 RIA relationships today through our Tamarac tool set, and we have about another 1,200 RIA relationships through our Envestnet tool set, which we're going to talk about in a second. We've done an enormous amount of work to integrate those two tool sets over the course of the last little bit. But in general, we do have about a 40% market share of advisors that are over $1 billion in assets. So our client base tends to skew a little bit to the larger side. And we've seen a lot of different use cases over the course of the last few years. I'll let Brian talk a little bit more about some of the specific technology work that we've done in regard to those integrations.
Yeah. So here at Envestnet, we offer to the RIA basically an entire dashboard or operating system for you. So we offer reporting, trading, CRM, and if you want money guide planning as well. Those tool sets have existed for over 14 years at this point. They've been rebuilt from the ground up, a couple of them recently. So specifically in the trading space, our trading tool set for an advisor who's managing their own models, trading their own accounts. Our tool set for Tamarac trading is really best in class. And some things we've done recently there, we've rebuilt the tool, the main trading screens, if you will, from the ground up over the last 3-4 years, improved the workflow, minimized clicks, made screens faster, quicker to respond, easier to read, better data points, and as well as integrated some other fields from our reporting tool set. So that's a major upgrade we've made recently. The other one, we'll talk more about this, but we've integrated the access to separately managed accounts, model portfolios from Envestnet directly in our trading tool set. And then we also have direct connectivity to the main custodian platforms. So Schwab, Fidelity, Pershing out there in the RIA space, where you can either send your trades in via API, or if you need to trade via fix, you have more sophisticated trading needs, you can trade via fixed as well. So making that as seamless a process so you can scale your trade workflows using our trading platform.
So if I could paraphrase, what we've done is eliminate the need for exporting a trade file, then importing it into the custodian website like we used to do in the past. Now we've got direct connectivity.
Exactly. And then also, and most importantly, in those earlier steps before you're actually making the trades, made it easier to monitor for cash needs. So do you have enough cash, or are you short cash in the account, whether that's sweep cash or position traded cash? Is your model on target? Do you need to make a wide scale change across many accounts who are assigned portions of a model? All those, those pre-trade workflows we've improved. We've continuously improved since we built the tool over 20 years ago.
I want to go back to the custodian. So we've got clients, a lot of our RIA clients are larger, and they have multiple custodians. So I have to tell you that export of the files and upload of the files was a real pain when you've got multiple custodians and have to manage all that. So being able to send trades via API and fix and manage it one click to the Schwab blotter is a tremendous time saver.
Exactly. I mean, almost none of our clients use one custodian only. Mm-hmm. I don't know the exact number, but it's in the 90s. Use more than one custodian. Mm-hmm. So,
indeed. And something you mentioned, I apologize if I missed some of your clients. So 1,500 RIAs on Tamarac, but another 1,200 RIAs on the Envestnet Envestnet Enterprise platform.
Yep. And they're using either the platform holistically, so they're doing their billing and reporting as well as trading, or they're using that just to access managed accounts, because we have the largest managed account marketplace available to our independents, or some combination therein.
As just a shorthand for understanding those two tool sets, as Brian was saying, we've done an awful lot of work to integrate those two environments over the course of the last 3 years. And in general, what that allows us to do is to really kind of meet the advisor where they're at. So as Brian said, Tamarac tends to be kind of the core reporting platform for us, given that it's the most robust reporting platform that we have. The Tamarac trading tool ends up being the primary tool for advisors who want to administer their own trading, but as they wish, they can use outsourced trading capabilities through Envestnet, in particular to access managed accounts. And the distinction between what's Tamarac and what's Envestnet as a tool set is really blurred these days. It doesn't matter. So we tend to feel like we've got a pretty good solution to meet advisors with the trading capabilities and reporting capabilities that they want.
And that's really one of the goals of, I think, even acquiring Tamarac at some point, was to integrate all of your capabilities and make it such that it doesn't matter. You can bounce back and forth between platforms.
Admittedly, it took us a while, but we're finally there where those distinctions just don't matter.
That's impressive. Are there anything in terms of the rebalancer? What's coming this year? Can you give us a taste of what we're going to see?
The one we're most excited about is we're going to introduce call it a manual trade blotter. It's designed to support some of the individual bond trading that some firms are doing, especially as bonds have become much more popular these days. But it will support carving off any manual trades or assets that don't trade as liquid as ETFs and funds and stocks, allowing you to block those orders, go find the bond that you want, or if a bond falls in your lap, be able to allocate that appropriately to client accounts. But we can also we'll see firms use it for interval funds, which trade less liquid, of course, or alternatives like hedge funds and private equity. If you're trying to allocate to those in the trade workflow, be able to save those trades, block them as necessary, and then fill them back into the accounts using the trade workflow. So just really improving that nano trade workflow, if you will, for those assets that don't trade as liquid as others.
How does it work with hedge funds and PE? Are you getting data from somewhere? Is it just manually entered?
We do have data feeds from the likes of Case and iCapital, two of the bigger marketplaces of alternatives. Also, we find many of our clients just have access to stuff that there's no data feed for, so they're plugging it in. So there's the use of dummy tickers or placeholder tickers to allocate to, and then as they make the purchases, maybe they transact on a Case or an iCapital to invest in the fund, then we'll get the data feed back from there and be able to match that up to the trade. So it kind of depends on where you're transacting or how you're transacting those types of assets, which is obviously the still very fragmented part of our business, but connectivity where possible.
Well, it's fragmented in a lot of places. I mean, when you're talking about these types of assets, these liquid assets, it is difficult to bring all that data in. But I think it's this kind of capability will be great for breakaways that maybe come from a wirehouse and have some alternatives or other types of assets and have higher net worth clients, as do most Tamarac RIAs in general, tend to skew more higher net worth. So they might have access to Case or iCapital or other liquidity sources or other alternative investment marketplaces. So it's great that you guys are bringing that data into the platform. Can we move on to the client portal? So a lot of Tamarac is one of the most popular client portals, as well as, of course, the investment portal. Can you talk about on the Tamarac side, at least, about the client portal? What's new? How would it be helpful for Breakaway advisors building their business?
I'll let Brian get into some of the details here, but maybe the first point to make is we've just gone through a complete rewrite of the portal, and today we're using the same portal for both the Tamarac tool set and for the InvestNet tool set. So it's one single unified platform portal across the entire platform that we've been implementing for clients for the last 6 months. So it's been in production for the last 6 months or so, and I'll let Brian get into some of the more specific details around what we've done in the portal.
Yeah, so this new portal, the design where we're at today is one thing, and where we're going is the next. But where we're at today is we combine the performance reporting data, so what has happened in the client accounts from an investment standpoint, so asset allocation, performance, transactions, and the like, bringing planning data, so putting the performance of what has happened next to what is the plan going forward. So bringing money guide information in. So what is the probability of success? What does the plan look like? What are the costs in the plan? And then the third component is more of that short-term spending side of it. So be able to link credit cards and checking accounts and be able to see what does my spending look like, a la like a Mint or some of those other Personal Capital, some of those other aggregators out there, but it's under your roof with your logo on the top. So your client thinks about you as they're thinking about not just their long-term investments, but also their short-term spending in different ways you might be able to help them there. So those are the three things we've got in this new portal: is planning, investments, investment performance, and then the short-term spending idea, where you can do budgeting. You can also see some peer group spending. So how are you spending in certain categories against a peer group that you can kind of model yourself around. So those are part the portal. The portal's delivered in a website, of course.
Wait, Brian, can I stop you for a second?
Yeah.
I want to make a comment.
Yeah.
So I think the PFM capabilities are super interesting to me. As a former Mint user who's now left without because Mint shut down,
Yeah.
I think if my advisor were to be able to offer these capabilities would be very interesting to me, because I would be spending way more time on my advisor's portal than I ever have in the past. And that's always been something that's bothered me, that advisors really don't want their clients on the portal very much, because when they're logging in, they think something's wrong. Why are you on my portal so much?
Yeah.
What's going on? Whereas it's because you don't really have anything else besides your holdings. If you had other stuff for them, like PFM, like credit cards, like peer group spending, like you mentioned, which could give me more interaction, more capabilities to learn more, to work my finances, and still see that, hey, this is on my advisor's website. It makes my relationship stickier.
Yeah, and the reason we did that too is we see that the advisor's not just picking stocks or models or funds anymore. They're having to work both sides of the balance sheet for their clients. So they see that they're overspent somewhere and they need a credit line, or they're underinsured through the planning process. The advisor needs to be able to have that conversation, and the tech is what's enabling that.
It certainly is. So continue. You were moving on to another part.
Yeah. So the way it's delivered is a website, of course, that you can link to from your website as an advisor. So the client can log in from your website. It's also delivered via an app. Of course, we all spend time on our phones, more than we should. But Apple and Android app that has the firm's logo or the advisor's logo in the App Store. So we've delivered that. It's Apple, Android phones and tablets, and it delivers the same experience that they would see when they log in on the web in an app form. So they can, on the go, your client's traveling, they can look up and see all the same data points, the plan and the investments and the personal spending. There's also some capability to click on the phone number, for example, and call their advisor if you as an advisor want to do that. You can offer that kind of capability as well through that app.
And this app has been updated, right? It's been rebuilt and.
Yes, we've had an app for many years, but hadn't really done much to it. But as we rebuilt this new portal experience, we've also released a new app that just feels much more modern in the look and feel, but also it inherits those features. And then because we've rebuilt this app as an API first experience that is InvestNet wide. So whether you're using InvestNet or Money Guide or Tamarac, you can use an app, a portal experience. We'll be able to add new features. Like one of the ones we're looking to do in 2024 is like a Calendly integration or Calendly-like integration. So client can click and schedule on your calendar with a tool like Calendly from directly within the app or on the website. So just being API forward with this portal just opens up so much more for us to do here in the future.
Does InvestNet use the same APIs internally when your different applications are talking to each other? Is it the same set of APIs or is it a different set?
Yep. We've standardized the API. Basically, there's an API team now that just works on the APIs across all things InvestNet. So they consume data from anywhere, and then if you need to use it somewhere else, that's been it's been a multi-year effort. Wasn't simple, but that is the approach going forward.
Excellent. Do you know what is the percentage of end investors that are accessing the client portal?
Yeah, we're seeing since 2020 this has grown. We're at about 43% of our clients, so the firm's investors, are now using the portal. Generally, that's have logged in once a month or once a quarter. We're not quite sure on that timeline, but we're close enough there. And that was in the mid to low 20s before 2020. So as we all know, everybody is very comfortable at this point in transacting business and engaging with advisors and others online, and we're definitely seeing the evidence of that among our client base as well.
Let us shift to the last topic, which is integrations. We'd mentioned earlier some better integrations with the core InvestNet managed account capabilities. Can you expand on that a little bit? What am I going to see if I'm a Breakaway advisor using Tamarac? What am I going to be able to get access to on the InvestNet side that I didn't have before?
Just at a high level, I'll acknowledge, I think this is an area where we had a little bit of catching up to do. And as Brian said a minute ago, we spent an awful lot of energy and time over the course of the last couple of years building out a robust API library to provide for better integrations, both internally and with third parties. And Brian, I'll let you talk a little bit about some of the specifics that would be most notable.
Yeah, so we, as I mentioned, we offer a CRM, so we've always been well integrated there. We've also reinvested in the integration there to support more. That's a Microsoft Dynamics-based CRM that we sell and support directly to our firms. So that has always been and will likely always be our tightest CRM integration. But we also support many firms who use Salesforce. Salesforce is a big gorilla in the industry, if you will, for CRM. Some of the largest firms use Salesforce, and so we've improved our app. So we've updated the app experience. The key point there was supporting a personal account, which is a specific entity. But it also, we rewrote some of the ways that it integrates with Tamarac to support coming soon custom field integrations as well.
And that's also,
so those are some of the keys.
It's also important. A lot of our clients, enterprise clients, of course, using Salesforce, and custom fields are everywhere. There's some firms using dozens and dozens of these custom fields. So being able to move that data back and forth to InvestNet, I can see having a tremendous value. And can you talk more about the connecting reporting and trading with sleeve level performance?
Yeah, sure. So I'll leg into that. As you, again, like just to set the stage for this a little bit, we've had, sort of a benefit and a curse. We've got probably, I would argue, the largest technology-based stack for wealth managers on the planet, perhaps. And big initiative for us has been getting all those various components to work together. The two main components of that, frankly, in this space have been the Tamarac tool set and the InvestNet tool set. Mm-hmm. So 2 years ago, we developed the integration between Tamarac reporting and the InvestNet managed account platform that effectively allows for us to do sleeve level performance reporting in the context of a unified managed account for any advisors who want to utilize a UMA structure. So obviously the issue there is we're allowing advisors to deploy mutual funds, ETFs, multiple different third-party separately managed accounts in a single brokerage account, and have the performance reporting for each of those individual sleeves flow through to Tamarac. This is a big deal because it's allowed, we've got clients who've literally reduced the number of brokerage accounts that they have to maintain by 30%, based on the fact that they don't need to continue to maintain separate brokerage accounts for each of the separately managed accounts that they use. So that was the first big integration that we did in terms of between Tamarac and InvestNet on the reporting side. We've just launched the integration on the Tamarac trading side. So as Brian has articulated, Tamarac Trading really is our flagship advisor-run trading platform. It's been around for 20 years. It's one of the industry leaders in terms of being able to do asset location and manage an investment policy across multiple different registrations and brokerage accounts. We've preserved that capability in Tamarac, but we've allowed for the advisor, while administering a household level asset allocation policy and rebalancing process, we've allowed the advisor to select components of the household that would be deployed on the InvestNet platform in these managed accounts. So again, hopefully it's clear, but you can control for asset location, you control for a household level asset allocation on the Tamarac trading platform, but have trades executed appropriately on the InvestNet managed account platform.
And that's done seamlessly. I don't need to do any toggling or task switching or So
that was the work that had to be done to make sure it could happen seamlessly. And the answer is yes, it happens. It happens seamlessly from the Tamarac trading platform.
that I like, because I want to see if I have a household, I don't want to have to worry about what platform they're on. I just want to trade it.
That's exactly right. And, you know, I think advisors are constantly making a decision about the extent to which they want to control the minutia of trading. Some of them want to, you know, control for every trade that occurs in every account. Some of them are quite happy to outsource that trading. It's not where they're adding their competitive advantage. And some want a combination of the two. We feel like today, given these integrations, we're kind of uniquely positioned to, as I said earlier, meet them where they're at on that spectrum.
That is fantastic. It's what I want to hear, at least from my clients. So we are out of time, guys. You've been fantastic. Where can Breakaway advisors and then basically anybody who's interested find out more about Envestnet's RIA capabilities?
If you go straight to our website, you'll be able to connect with Brian or I or any of our colleagues. And of course, we would love to talk to you.
Now be investnet.com, would it not?
Correct.
All right, Phil and Brian, thanks so much for being here.
Craig, thanks for having us.
Thanks.
Hey, it's Craig again. Here are my top five takeaways from this episode. Envestnet Tamarac platform has 1,500 RIA relationships and a solid 40% market share of RIAs with over $1 billion in AUM. I'm pretty sure that 40% has been solid and consistent for at least the past 5 to 8 years or more. Someone fact check me on that. I'm pretty sure they've announced that a while back. So it's hard to do because market share is always changing. New firms are always starting. There's consolidation. So there's a lot of movement in that higher space. So be able to maintain that market share without churn, without suffering significant churn is impressive. And one other thing we talked about, of course, Envestnet has two or really three portfolio management platforms. The second major one is they call it the enterprise platform. I'm still calling it ENV2. And they have 1,200 RIAs on that side of the business. So almost 3,000 RIAs using Envestnet's portfolio management and other platforms. Point number two, they rebuilt their rebalancing workflow to make it more simple and speed it up. Now, of course, Tamarac was the core platform when they acquired it back, I think, in 2004. It was just a rebalancer. They still have some clients who are just using the rebalancer, but they've, of course, built out this entire platform. The integrated investment accounts, they enable the direct trading connectivity to custodians via API and FIX, which we like to see. They also added non-discretionary rebalancing capabilities. Not a big ask for advisors, but still important. There's still a number of advisors, a good percentage of advisors who do support non-discretionary accounts and need to rebalance those, and improving support for illiquid assets. Number four, integration between Tamarac and Envestnet for their UMA allows sleeve-level reporting and trading integration. We like that. As I mentioned earlier, a number of our clients have been asking for access to the Envestnet UMA platform, SMA managers inside Tamarac. So it was a bit clunky when they first launched it, but that was an MVP. So we were happy to see anything. It's gotten a lot better, much smoother integration between those two platforms. They enhanced their Salesforce integration. And they also launched some new standardizations in their APIs to allow seamlessly sharing data across systems. All right, that's it. You've reached the end of another episode of the WealthTech Today podcast. Please go to our website, EzraGroup.com. Scroll to the bottom of the homepage. Smash that button to subscribe to our newsletter. Once a month, you'll receive an email chock full of wealth management goodness, news, updates, information. You won't be disappointed. So thanks for listening, and talk to you all again next time.